Hey, hi traders. I'm sorry for not having a video since the weekend. I've been dealing with personal health issues, plus I got some family related health issues that's been plaguing our family. But at any rate, it's all about bonds and yield curves since the Fed come out here with one heck of a dovish stance, which, to be perfectly honest, is not the best scenario for the markets in my opinion, because it's going to drag on the financials most likely, but we'll see what happens here. Um, Basically, what we have now, as you can see here, the long end of the curve totally got smashed after the announcement yesterday. And so basically, we are getting an increasingly flattened yield curve on uh, uh, interest rates. And typically once you get the inversion of the 10 year, the 6 month, or the front end starts inverting beyond the 10 year, that's the beginning of a recession. So right here, right now, we're technically not in that yet, but so keep that in mind. We're getting closer and closer to getting an inversion, and we are going to have an inverted yield curve. On the shorter end, we do have on some of the time scales we have an inversion already, but crossing the 10 year, that's the critical. Okay. And we are rapidly approaching that. So we'll see what happens here on that. Okay, give me a second. You really need to start keeping your eyes on Germany. They're struggling here, and even on the bond yields, uh, the Treasury announcement, it's having uh, ramifications over in Europe. And you notice we have this real tight ascending pendant, and we sold off right at the apex yesterday, suggesting that we are going to start breaking. We could potentially be breaking lower off this pendant, so we could have a significant increase in volatility out of the European sessions, which would actually could also drag down on the U.S. equities. So keep that in on your radar. And then also over in Hong Kong, they had today was one of their biggest days. Let's see me think here. One second. Okay, over on our Hong Kong exchange, we closed relatively flat, but we did have additional big companies announcing in the overnight session. Even Tencent was one of the ones that just reported a few minutes ago, and they really missed on their earnings. And so this is another one in a wedging formation with a potential topping candle. Uh, we could be coming back down to this bottom of this range in the Hong Kong markets. Could definitely be seeing signs of risk off in this market, especially we're seeing global rallies in the bond markets across the world, and that could also be putting increased pressure on global equities. And if you look at our VTI, we got a little doji on that one too, and we're potentially putting in a could definitely be putting in a topping formation on our global equities, not counting U.S. equities. And you see right here we have uh, what seems to be an inverted head and shoulders. Could very well roll over and fail here. So keep that in mind. A lot of pressure on the global equities. Okay. Another major development happening in the overnight session, and that is the breakdown. As you can see right here, this prior swing low, the German 10-year bond yields are breaking down. There's an extreme flight to safety in German bonds, which is negative for equities in general. And you see what happened when we started breaking that level before, the sheer shock and awe that hit the markets as it started breaking this level in the past. So keep this in mind. It's very worrisome. And so far, our VIX and our volatility indicators here in the States are not uh, factoring in what truly is happening here in the bond markets here in Germany. And this could be a contagion. Not necessarily will, but could be a contagion. So just keep in mind here, Tencent is listed on the U.S. exchanges, but it doesn't have any bonds trading on the ticker. So anybody who's in this stock, they can't even get any insurance going into this earnings event. And I'm really thinking we're going to come in tomorrow and see that at least down to the lows down here at around the 260 area for Tencent, potentially. I mean, so not having bonds, you can't tell exactly how much of an impact such a massive earnings miss is going to have on the shares. So this is probably going to drag uh, all day today. The U.S. equities are probably going to be in the red or they're close to it or worse, and the Asian session overnight is probably going to be pretty sad going into the overnight tonight. So keep that in mind. That pops in the market should likely be shorted today. Some things happening in my RES futures here. We've had this channel we've been trading in since Christmas Eve, and as of today, we are right here in relation to the channel. We're in the high volatility range of our channel for high fast moves up, fast moves down, and so just keep that in mind. And we're at the right near yesterday's uh, closing price. We're just kind of doge. Looks like we're getting a little bit turned green just a second ago. We're just going back and forth on that, and then so tomorrow will be Friday. So I'm actually thinking the potential I'm thinking for today, we are going to close right down here at the 28.14 area on the ES futures. So that gives us a red day. And then tomorrow we're going to be opening up right over here on that trend line. So that's a scenario that I'm looking for today, 28.14 as a potential close for the ES futures. And if you go here, we're in a nice solid uptrend. Typically when interest rates are locked at lower rates, it gives a bid in the FANG names, and we've seen that as FANG has been doing pretty well here. So far this morning, we do still have a little bit of, it's up $2.25 on the NASDAQ. We still have a little bit of bid in the early morning session. Of all the areas that could get a bid, that would be the NASDAQ. But here, seeing so many companies out of Asia missing their numbers, I would be gravely concerned to be pushing tech to the long side today. We are, as you can tell, the bell curves. Price likes to migrate to the highest volume to do business, which is on the downside at this point. So keep that in mind that we are in a sort of a volume, not necessarily a volume void, but a lower volume zone, which, based on volume profile theory, prices would be more likely to go lower than go push higher under the current situation with such a sustained bid in the bond market. And the most important of them all, that's the Russell 2000, because this is your breadth indicator of the markets. We have a complete and total breakdown of yesterday's trading session here. And I think it's RTY slash RTY. That's the futures. Yeah, I'm sorry about that. I didn't have that on my chart. But as you can see here, it's kind of dojiing out as well as along with the other ones. So just keep this one on your watch here. This is, like I said, the most important one. This one's going to tell us which way the markets are going to tend to go today. So far, it looks like they're really trying to push it lower. So we'll see what happens. Our VIX and VIX futures. Basically, the two things I like to really look for is to make if we're going to get a sustained sell-off in the markets, I want to see them buying up the longer end of the curve for protection, and they're not doing that yet. They're buying up the short end of the curve, so this does imply that this is going to be a short-term sell-off in the markets. So just keep that in mind. And secondly, I'd like to see a significant bid in the volatility, the VIVIX. a significant bit up in the volatility of the VIX, and we're not seeing that either. And volumes probably going to be light the rest of the week and next week because there's so few buybacks hitting the market. So keep that in mind. That's probably why a lot of this complacency is in the fear that that there's going to be far less volume, and they don't think the markets are going to tank. So keep that on your watch too. Some main themes to keep on your watch here, and that's your transports. Um, the two main sectors of the markets, in my opinion, are your transports and your semiconductors. Your semiconductors are pressing to the top of the ranges where your transports are breaking down from this channel. So you got a complete dichotomy there. So your transports are more Dow Jones Industrials weighted. So just keep this on your watch. We have gapped down and broke away from this trend based on FedEx yesterday. So just keep this one on your watch. This next one, ZNs. Okay, your 10-year bonds, U.S. bonds. Uh, we did cross into bullish territory on your bonds yesterday on your weekly. So I do want to point that out that the bonds have crossed a significant the 125 SMA to the bullish side for this week, suggesting a sustained bid in bonds um, in the near term, and that is a more bearish signal for the overall equity markets. So keep that in mind. That's what's shaping up right here, right now. And in XLF, your financials, they tend to struggle a little bit when bonds are rallying. So keep this in mind. We did have a breakdown yesterday away from the trend, which is most likely to continue. And this is our 125 SMA. We are testing it again. Quite possibly this week, we're going to be breaking back down into bearish territory on the financials. Above the 125s, bullish, below's bearish. So keep that in mind. I mean, we are channeling sideways. It's just important to note the delineation of what's setting up here. And then you have your, did I already do XLI? No, that's IYT. Your industrial, and XLI is your industrials index. And similar situation, we're breaking out of the primary channel from Christmas Eve as of yesterday for the industrials in general. So this might bode pretty bad for Boeing, knowing that we have several signals that are suggesting profit taking in the industrial arena. Yeah, I just want to point out here on Boeing on your monthly chart. This is one heck of a red candle on your monthly chart, and we're right here. This double top area, Boeing's trying to hold above this, and I'm just waiting for the next major move news event to finally break this down, and we're probably going to be coming down to the 310 area here in relatively short order, in my opinion. That is pretty bad news on that aircraft issue that Boeing's got, and I do think this is a significant top formation for Boeing, and it's going to go with the industrials to the downside. Now on the other side, Apple, I don't think it's actually hit its top yet. I'm actually thinking we got a news event next week for Apple, or news next week, yeah. And I think Apple is going to run up to the 193, 194 area. I think it's going to might find some resistance around 194 on Apple, and so that's why I'm not overly bearish yet these markets, because I don't think Apple's even gotten back up to its significant resistance yet. So just keep that on your watch. Netflix is trying to rally into the Apple News event next week. It's kind of amazing. This is one that I'm not very comfortable with at all. I think Apple. I mean, once you get up to the, if it gets up to the, the 382 area, something like that, I would think going into the Apple News that I would prefer shorting Netflix. But just keep that in mind. Because Apple is announcing their streaming platform next week, and I think that's really what's held Netflix back. So just keep that on your watch and something to think about. And keep in mind on these earnings too, they only got 30 cents per share last quarter, versus 89 cents, and it sold off in 89 cents back here. And here we are even higher with that, and then they had horrible guidance to boot. Something's just not right there. Facebook is one coming into next week. I think it's going to go lower. So you have to be really careful trying to push Facebook to the upside, in my opinion. Now, the yearly value point of control is 171, but I'm just waiting for more bad news to hit it to finally break this uptrend line. It dipped below 1. It's already caught a bid yesterday to put it back over top of it, but I think it's just going to, by the end of the week or the first of next week, it's probably going to resolve a little further to the downside, in my opinion. So just keep this one on your watch. And Amazon has been the beast of the market, but from a technical, you see what it did yesterday, and it really got most of its bid right after the announcement from the Federal Reserve. So keep that in mind. The lower interest rate environment is bullish to these tech companies. So, but yeah, it found a really good bid into the close yesterday. My resistance was the 1668 area, 1668 area, and it's blown right through that by $30. So keep that on your watch. Quite frankly, from here, I mean, it's hard to say. I mean, we're at it's crossed right over a yearly resistance value area high, significant resistance right here. So if the markets were to sell off, I would be really watching Amazon to lead the way to the downside, seeing as it's right here at a significant resistance zone. Okay, that's all I got to say today. I will see you guys in the chat rooms, and please like the video if you like it. Leave comments below, and you can follow me on Twitter. And thanks a lot, and see you guys later.